And in our top business story, households in the Arabian Gulf are facing their weakest earnings growth prospects in a decade as low oil prices force employers to keep pay rises to a minimum. Real wages in the region will increase by just over 1% next year, a lower rise than most other regions except Latin America and Africa, according to research from recruitment consultant Korn Ferry. Although headline pay increases in Arabian Gulf countries would average 4.2%, inflation will mean that real disposable incomes will rise by just 1.3%. The UAE is expected to have the lowest real wage increases in the region, with average salaries rising by just 0.5% as slowing growth forces companies to tighten budgets. Employees in Saudi Arabia, the world's largest oil producer, are expected to fare only slightly better, with real wages expected to increase by 0.8%. Korn Ferry analysed salary forecasts from HR departments for 25,000 organisations in 110 countries to find out which countries were likely to experience the biggest and smallest pay rises next year. The region with the highest predicted pay rises was Asia, where salaries are forecast to increase by an average of 6.1%, and real wages are expected to rise by an average of 4.3%. Earlier this year, online recruitment firm Gulf Talent predicted that salaries in the Gulf region would rise by 5.2% this year. Last year, the UAE's inflation rate was 4.09%, with the cost of housing and education having the steepest increases. Rents have fallen by 9.4% across Abu Dhabi's residential investment areas since the start of the year. That's according to new research. The decline outpaced a fall of about 5.2% in the value of homes over the same period, and according to a report from Clutton's, the real estate consultancy, which predicted further declines next year, with the top of the market being the hardest hit. Average house values in Abu Dhabi fell by 2.4% in the 3 months to the end of September and are likely to fall again next year as cash-strapped companies lay off high-earning senior executives. The broker estimates that by the end of this year, villa values will have fallen by 10% and apartment values will have fallen by 4%. Clutton's forecasts that villa prices next year will fall again by another 7% and apartment prices will fall by another 2 to 3%. Clutton's also estimates that average rents in Abu Dhabi fell by 1% during the third quarter of the year and stand at 9.4% lower than at the start of the year. The villa rental market had borne the brunt of the slowdown, with average villa rents falling 20% in 2016, while high-end villas also recorded the biggest falls in rents. His Highness Sheikh Ahmed bin Saeed Al Maktoum, the President of Dubai Civil Aviation Authority, Chairman and CEO of the Emirates Group, attended the opening day of the 7th Middle East and North Africa Business Aviation Association show. His Highness Sheikh Ahmed bin Saeed toured a number of business aircraft and private jets on display during the 3-day show, which is being held at the Dubai World Central. Organisers have revealed that over 9,000 trade visitors are expected throughout the 3-day biennial event, with over 460 exhibitors from 50 countries. A total of 50 aircraft were on display at the event, which also included the regional debut of Dassault Aviation's long-range Falcon 8X, which has been delivered to a regional operator. The event coincides with the new business aviation forecast by Honeywell, which estimates deliveries of over 8,600 private aircraft valued at $255 billion through till 2026. Considering the current economic outlook, the industry report states that 2017 deliveries will be lower compared to earlier estimates. For major operators in the region, such as Abu Dhabi-based Royal Jet and Saudi Arabia's Skyprime Aviation, business travel continues to be on the rise, particularly for the VVIP segment, as a result of increased political activities. The Abu Dhabi-based carrier received their 8th Boeing 737-800 with a capacity for 34 passengers, as they aim to add improved services to meet their clients' needs.
In terms of destinations, you're looking at Geneva and London and Rabat and those kind of areas, into Southeast Asia as well, quite a few destinations there. But there's a lot of regional travel as well, so this aircraft obviously has full capabilities for that. So having the full range of London and Southeast Asia is important, but really wherever our customers want to go, that's where we take them. As loyal as our customer base is, if we don't keep them happy with new products and new styles and designs and new experiences and also competitive pricing, they're going to go to someone else. So that's what we've had to do. We've had to bring our pricing down and be more competitive. We're a little bit lucky that we're in the BBJ sort of business airliner area. There's not as much competition, but it's growing as well because it's a lucrative business. So we have to just be competitive. So we're seeing it. We're seeing the results of the lower oil prices. We're seeing the results of the shrinking budgets in every area. Luckily, at the VVIP level, which we operate at, it's maybe not as distinct, but it's still there.
It's true. Everything will be affected by by cutting the expenditure in the government. But what we see that's a little bit shifting from, for example, wide body to narrow body, from narrow body to small body, and this kind of thing. But it is like an infrastructure. You can't, you have to fly. This is for the VIP actually. I mean, they have to fly and use the services by them. But maybe some people are affected, but in generally nobody affected by that actually. Until now, we don't see that, and we see there is a potential and there is that opportunity to grow also. Here in the Gulf, countries, they like that the big aircraft, the wide body, it's useful for the number of people that can come together in the aircraft. They travel also the range of the aircraft, because we need minimum 15 hours to be to travel from place to place, for example, or to Europe, for example, 8 hours, something like that. But with the luggage and most people, they need the wide body for carrying them without any limitation actually.
The vast majority of UAE-based CEOs are confident about prospects for their organizations over the next 3 years, according to the KPMG 2016 CEO Outlook report. The survey findings reveal that 76% of polled UAE-based CEOs, compared to 41% of global CEOs, believe that their business will change significantly over the next 3 years. The survey also found that UAE bosses believe that growth over the next 3 years is mainly going to be organic and driven by new products. According to KPMG, while some of the UAE findings reinforce global trends and leading practices, UAE CEOs are generally more optimistic about the next 3 years than their global counterparts. The survey also found that most UAE chief executives have identified a strong client focus as a key strategic priority. They stated that regulatory, talent and reputation were their top 3 areas to look out for the next 3 years, while CEOs also believed that there was likely to be a significant gap for workers with a range of strategic skills in the short term, including cybersecurity, digital innovation and data analytics.